Japan was the best performing developed equity market in September off the back of PM Shinzo Abe getting another 3 years in office. Markets seemed excited about a few more years of his fiscal and monetary stimulus policies. Pharmaceutical companies led US stocks marginally higher as the negative sentiment that's plagued that sector recently started to wane, with rhetoric from politicians around excessive drug pricing slowing. Emerging markets were mixed as Chinese, Brazilian and Russian stock markets were higher, while Indian stocks had a torrid month. Oil was key to the movements in Indian and Russian stock markets. Oil prices rallied as the upcoming US sanctions on Iran started to weigh on supply. The Russian stock market is dominated by energy stocks, which benefited from the higher oil prices, while India, where oil makes up a meaningful portion of their import bill, saw the pressure on their trade balance add to an already high current account deficit. As the Indian central bank hiked rates to defend its currency, the first casualty was one of India's largest shadow banking companies, which failed to make a few interest payments. Trade tariffs were back in the news in September as the US implemented tariffs on another 200 billion of Chinese imports. China responded with tariffs on 60 billion of US imports, but at a rate lower than expected, presumably to keep hopes of a diplomatic solution on the table. Tariffs coincided with the US 10-year bond yields reaching 3% for the fourth time this year. The US Fed predictably hiked rates during the month, but rates also pushed higher after US employment data showed wages growing faster than expected. Higher rates were a drag on real estate stocks, which were comfortably the worst performing US sector in September. If you have any questions on this or to invest with Anchor, please contact us on sales@anchorcapital.coza or visit our website www.anchorcapital.coza.